And welcome back, everyone. I hope that you enjoyed Gwen Preston and everything she had to say about how to really take advantage of what she believes and many others believe is a precious metals run, but also within the resource space, what to look for. And speaking of which, our first company today is going to be one of those horses that you can start looking into. I know that, Mike, you're going to go into great detail about Sierra Metals and all the different things that you want investors to know about. This is an in-depth presentation. We're going to go through it so that people really get a good understanding of what it is that you've been creating. We'll also, for anybody who's coming in, we always recommend to go in the chat function. If you're here early in the morning, you're around like-minded individuals. Those are the people that I personally love communicating with. So please, in the chat, we'd love to see what city or what province, state, maybe even country you're coming from. So throw it in there. And there's also a Q&A function. Like with all of our webinars today, we highly encourage you to ask questions. You might already have a question just starting up for this, or maybe throughout the presentation, you might have a question. Feel free to throw it in there after this presentation, which is going to be about 25 minutes or so, concludes. At that point, we'll come on and myself and Mike will go through. I'll be asking all those questions and Mike will be going through them. We'll get through as many as we can before the webinar is over. So please be sure to get that in there as well. And just before I hand it over to yourself, Mike, I'm going to share right now the presentation. If everyone looks at the handout section, you'll have seen a little orange dot on whatever device you're on. You can now download this presentation that Mike is going off of at your own leisure. So I'll hand it over to Mike McAllister, my good man. I'll be seeing you when we come back to questions time.
Perfect. Thanks, Brendan.
Absolutely.
Good morning, everybody, and welcome to my presentation. Sierra Metals is a growing and a diversified producer, and we're profitable to boot. So we produce 5 different metals, being copper, silver, gold, zinc, and lead. And we're listed in both Toronto on the TSX under the symbol SMT. We're also listed in New York on the NYSE American under the symbol SMTS. These are our standard-looking disclaimers and forward-looking statements. We seek safe harbor. So before I get started, I just want to take a moment to give an update on how we're surviving COVID and what's happening with us, as we were affected by it. During the second quarter, we saw both mines in Mexico actually the one mine, the Bolivar mine, was slowed down, and as was the Yauricocha mine in Peru. And the Cusi mine was in care and maintenance. Luckily, mining has been declared an essential service and things are getting back on track. So on beginning of June, both Yauricocha and the Bolivar mines started up again and we're ramping up to full production. And Cusi started at the end of July, so it had 2 full months of operation during the third quarter. And so, it's still very much a situation in these countries for COVID. But what we're doing to manage the situation is we're doing what's called the double fencing method. So we test the employees, they're quarantined, and they're tested again before they go into the active workforce, which is helping us to mitigate any further problems and, try not to have to close our mines. But, full disclosure, we do have, in terms of what we're testing, there's a certain percentage that are getting turned away because they're positive. And so, we send them for further medical care and help. And, but luckily, the remaining employees that are working there are working at a very high productivity rate, and we're meeting our production records. However, that is something that we have to be aware of and be very careful about going forward. However, luckily everything is going well, and we're moving ahead with our growth and our production schedule. So, just a snapshot of the company. Sierra Metals is a polymetallic producer, and we really have strong and precious metals exposure. The 3 mines are located. First one is the Yauricocha mine here, and I'm just going to pull on my draw feature here. Sorry. Yeah, so the first one is the Yauricocha mine here, and that's located in Peru. And there we produce all of copper, zinc, lead, silver, and gold. We also have next the Bolivar mine, which is located in Mexico. That's predominantly a copper mine, but we also get gold and silver production from this mine. And finally, we have the Cusi mine, which is predominantly a silver mine. It's 95% silver with a little bit of gold coming from there as well. And so if you look to the right here, oops. We have the graph that shows the revenue breakdown for the company, and you can see that the biggest revenue is coming from copper, followed by precious metals with gold and silver combined, then base metals after that. And the one thing you'll notice is as we are going forward into the quarters, this graph represents trailing 12 months as of our last financial reporting in June. And you'll see when I show you the quarterly results, as well as when you see our next results come out on November 9th, you're going to see that copper and precious continue to grow. And so those are our leading three metals in terms of revenue. And so we're quite excited about that, given the bullish nature of those metals. Why would you want to invest in Sierra as a company? We're a growing diversified producer, as I mentioned, with strong and precious copper metals exposure. We have a solid balance sheet with about $41 million, and that's able to support our growth and our capital expenditure programs. We are profitable and cash flow positive, and we expect that to be really noticeable in the second half of this year as we ramp up production and as our EBITDA and cash flow continue to grow. And we expect that to continue into the coming years. We do have a successful history of building mineral resources with excellent potential for further organic growth. And that could be witnessed by a press release we just put out yesterday, where we announced a positive PEA for further expansion at our Bolivar mine from 5 to 10,000 tons per day that had an after-tax NPV of $283 million and a life of mine cash flow of $521 million. And so although this presentation was uploaded before that press release went out, I highly encourage you to take a look at our website, which is sierrametals.com, at the news release section, and have a look at the full press release for full details. But again, this points to the fact that we're continuing to organically grow the mines, and that's based on large resource bases that we have. We operate in Peru and Mexico, which are excellent jurisdictions. Both have established mining codes, and we're able to find highly qualified people to work in our mines. And finally, we have an experienced management team and board that are focused on the per share value for all shareholders. Just a quick look at our capital structure here. We have 163 million shares outstanding. As I mentioned, we just have about $41 million in cash currently. We do have debt right now, debt of 99 million. And so that debt facility is financed at 3 months LIBOR plus 3.15. So that debt is effectively under 3.5% currently. And with our cash flow, we're more than able to meet the repayment schedule, which starts in June of next year. And one of the reasons we've taken on debt is, again, we haven't financed since 2011, and so in an equity financing, and so this is a cheaper cost of capital for us as well. We have more than the ability to pay it back, and this definitely benefits as we pay this down the shareholders of the company. We do have research coverage from 4 different banks here. And I will note, if you're looking to read some of the research, if you go to Noble Capital Markets, their research website, which is called panelcheck.com, you're able to see Mark Reichman's notes and write-ups on Sierra Metals through their website. Finally, just pointing out our ownership here, we have a major owner, which is Arias Resource Capital. They own 52%. Alberto Arias also sits on our board as the chairman. We also have BlackRock, Evie Hambro out of London, which is a fund and not the ETF, which own just under 8%. We also have a couple of larger holders as well that are more family offices, but definitely very supportive and strong shareholders in the company. Currently, the stock's trading over $2. We had some good bump yesterday from the news release, and market cap is about 325 million Canadian. So this is where I would like to point out our growth potential. So currently looking at 2020, for this year, we're going to produce around 9,350 tons across all 3 mines. And so this is assuming 3,150 at Yauricocha, 5,000 at Bolivar, and 1,200 at Cusi. Next year, we're expecting to bring Yauricocha, to 3,600, and that's based on the receipt of an expansion permit. So all the work has been done at the mine. We're just waiting on the permit for the government. That they've slowed down in their permitting process just a bit because of the COVID implications in country. They haven't been working to full capacity. So we were hoping for that this year, but it's looking more like it's going to come in the early part of 2021. And so with that, that'll bring us to just under 10,000 tons per day of production. Where we're going now is what's interesting. And so we just put out a press release yesterday that shows that we're going to be going to 10,000 tons per day at Bolivar, but we're also going to be going to 5,500 tons per day at Yauricocha and up to 2,400 tons per day at Cusi. So we're going to be just under in total about 18,000 tons per day of production at all three mines. And so this is great for us. This is organic growth, great value. Usually, typically, this is lower capex than it would be if we built it all out first and then expanded it. And we use a lot of local contractors and try to keep the EPCM in-house. And so we're able to do a lot of these very cost effectively and with lower capex on the front end. And so again, this just shows you that we're going to be going, in 2020 from 9,300 to close to 18,000 tons per day starting in 2024. And how are we supporting that growth? This is important as well. So we've got a great history of replacing our mined tonnage. And so, when you look at Yauricocha, for example, we have 8.2 million tons, but we have over here, you can see about 20 million tons of resources here. At Bolivar, we have 41 million tons, and at Cusi, we have just under 7, but we're going to be putting out a new 43-101 at Cusi probably before the end of this year. So we do expect to see a significant bump here in the resources at Cusi. And so, again, we have 8.2 million tons of reserves at Yauricocha. And so Yauricocha is a deeper mine, and it gets very expensive to drill to depth. So while you're going to see a mine life here, probably at 7 years, if you look back, and this is a mine that's old, it's been in operation continuously since 1948, there's never been more than 5 to 7 or 8 years of mine life on it because it becomes very expensive to drill to depth, and there's not a lot of return on that. So it's cheaper to drill from the mined out areas and to move it forward. So, we're quite excited about that. Bolivar, we have 7.2 million tons of reserves. And Cusi, we're drilling on to improve the resource base. This is a mine that is coming out of development into production. And so this will continue to improve as we move these mines forward. The one thing I'd like to point out here too as well is our costs versus our realized prices. And so, as we increase our production levels at all the mine, this has helped to lower our costs on a per unit basis. And this is expected to continue as we ramp up production throughout this year and continue into next year. And so if you look at the different mines, you can see that the bar graphs represent for example, this is the cash costs at Yauricocha with the all-in sustaining, where our cost level is. The yellow line here represents our realized prices at the 6-month mark. But what I've also included here is the spot price that's currently happening right now. And so you can see at Yauricocha and Bolivar, the spot price is well higher. And you can see yesterday copper went up as high as 315. It's well in very profitable mode here. And we're getting significant cash flow and EBITDA from both Yauricocha and Bolivar. Cusi, last year, this is a bit of an interesting story because last year we had a subsidence here, or a subsidence, and we had to deal with that and do a bunch of extra development. We were also in care and maintenance during the second quarter. So our current spot price, our current costs are quite high here at the 6-month mark. What you're going to see in the third and the fourth quarter is that we expect these costs to drop down on a cash cost basis between $14 and $16. And so by the end of the year, this mine is going to become profitable. It's going to start to contribute to the company, its cash flow. And, given the current silver price and where we're going to have our production costs, this mine becomes a profitable mine. And what's more interesting, and I'll talk about this later, is that we've had a very recent discovery here of high-grade silver, which is going to continue to improve the multiples here. Just a quick look at our guidance versus our production. So for the year, we were guiding on a copper equivalent basis to have copper come in between 110 and 122 million pounds of copper equivalent produced. And so where we are right now, we're at 89.1 million pounds of copper equivalent. So we're well on our way to meeting our production for the year. And you can see above the different breakdowns of the various metals and how much the production was for those for the quarter. So again, and down below here, we show it on a silver equivalent or a zinc equivalent basis, whatever you prefer. But again, we're well on our way to meeting our production and well on our way to solid cash flow. Again, what I'd like to point out here, this is the financials here are based on the 6-month number. And that what's going to happen here is when we see our 9 months number come out, the second half of the year is going to be stronger than the first half of the year was for us. Obviously, because we experienced COVID slowdowns and a shutdown during the Q2 area, which was government mandated. And so what we have here is, for the 6-month period, we produced $97 million of revenue. By the end of the year, I think we're going to be much more in line with the 2019 number of $229 million of revenue. We've had adjusted EBITDA of just under 30 million. Again, that number is going to grow significantly in the third quarter alone, and then again in the fourth quarter. Cash generated from operating activities of just under 15 million. Again, that number is going to grow significantly in the latter half of this year. So I really encourage you when the financial results come out on November 9th to take a look at this, because I think you'll be impressed with the mines where they're running now and what their potential is. Capital expenditures, we've spent about $14 million here this year. That's running a little bit behind because, again, during the second quarter, we had COVID slowdowns. However, we're working very hard to catch up on exploration and some of the development projects we were working. So that number is going to come in somewhere around the $40 to $45 million for the year mark. And that'll catch us up on a lot of our capital requirements and our projects that need to be built. A sustaining CapEx for the company as a whole is about $20-ish million a year. Free cash flow, you can see that the first quarter was negative, but in the second quarter we had 4.9 million, and that number is just going to continue to grow in the third and the fourth quarter. So we're going to continue to build our free cash flow, and our cash balances will be higher at the end of this year than it was when we started the year. This is our Yauricocha mine. Again, it's an old mine. It's been in operation since 1948. However, it may be old, but it's certainly not anywhere near the end of its lifespan. When we picked up the property in 2011, it was just the central mine that you see in this ovoid here that was that was in production, and there was, the mine. It was thought that the mine potentially was coming to the end of its mine life. We've since proven that wrong. We've had the discovery of Cuya Moscota, Esperanza, and Escondida. And we also have other new opportunities that we're working on right now. So we continue to improve the mine life, we continue to grow the resource base, and we continue to grow this mine. So although this mine's been around for 70 years, it's going to be around for another 70 years. We do own 82% of the mine. It's 18,000 hectares. So rather than a mining camp, it's a mining district. And we're probably only currently working about 15 to 20% of that property. And so I'll show you on some maps coming up. But again, this is a mining district, and so there's a lot of opportunity to continue to grow this. As I mentioned, the reserve life here is 7.3 years, and that's based just on the proven and probable reserves. And so if you convert the indicated, the measured and indicated, the inferred, and we have a pretty good conversion rate here of about 75 to 80%, you're looking at a much longer mine life, in excess probably of 15 to probably maybe up to 20 years here. And so we're quite excited about how we're going to continue to grow this mine. Looking at the tonnage, you can see that we've been continuing to ramp up the tonnage. In 2017, it was 2,900. In the last quarter, it was 3,600 tons per day that we were producing at. You can see the copper equivalent pounds produced. We're at 56.8 million pounds for the year, and again, it's going to continue to improve in the third and fourth quarter. And you can see also, or actually, this does include the third quarter. My apologies. And then you can see our cash costs here. We're producing considering on a copper equivalent pound sold. Our cash costs are $1.06, and our all-in sustaining costs are $2.05 per equivalent pound copper sold. And you can also see here in the pie chart on the right, this predominantly copper is our biggest revenue from here, followed by zinc, but the precious metal value is also significant here as well. So this is truly a diversified mine and provides a lot of upside for metals that are the market is bullish on right now. This is a long section of the mine. And so you have to the right here, this area here is Esperanza on the left. Moving over, Cachi Cachi on the left. The next mine over is Esperanza. This is Cuya Mascota. And then this area here is the central mine area. And so the first thing I'd like to mention is that everything is open to depth. And so what we also believe, or what our geologists believe, is that as you go to depth, these zones are merging into one ore body, and it's becoming one solid continuous ore body at depth. We also believe that we have a porphyry at depth here. We put a few holes in. It's in a porphyry nature. We're going to continue to drill on that, and as porphyries are very expensive to develop, so there's a good chance that if we find something at depth, there could be a joint venture. We could work with a larger partner to develop that. However, still closer to surface, and you'll see here in this area that says horizontal growth potential. This is a zone between Esperanza and Cachi Cachi, which, where we have three faults meeting on the property. And we've started to drill out on this. It had stopped during COVID, but we've now ramped up production again, or exploration again. And so what we're getting some very positive results from here. And I hope that we can have these released, before the end of the year, and show the market that, again, this is going to be a new zone, new discovery. And so we continue to find ore bodies, not only closer to surface, but at depth. And so this mine just continues to deliver. Some of the infrastructure projects that we've completed here, you'll see a red line here along the 720 level. And this comes right out through an adit to the side of the mountain, and then, which you see here a picture of, and it goes right to the mill and to the waste pile. And so everything is hauled up now to this level with three different shafts that we have here to the 720 level, hoist and taken out to the mine. One of the benefits of this is that we don't have to haul to the surface anymore, so that shortens the hoisting time and the turnaround time on the hoist. Also, the track is a state-of-the-art tunnel. We're able to put larger equipment, larger box cars, so that we can haul more ore and waste. And so overall, it improves the efficiencies and helps to lower the costs at the mine. Aside from brownfield opportunity, we have a lot of greenfield opportunity as well. You can see the Yauricocha fault here, which we've been mining for the last 70 years. It's got a 3-kilometer strike length on it, and we understand the geology here quite well. We ran a Titan 24, which is a geophysical survey that actually can penetrate up to 1,300 meters to depth. And we picked up several new anomalies, especially here along the Chonta fault, which is a regional fault which runs for hundreds of kilometers and has some other significant mines on it, including Toromocho to the north. And so this lit up very similar to the Yauricocha fault. So this represents another huge discovery opportunity for us. We're going to be drilling on an area called Kilkasca here. This year, again, we're just ramping production or exploration back up because we had to stop during COVID. Another area here to the north is San Juan Don Leona, which we're getting some good targets on as well. And so these mines or these opportunities are within about 5 kilometers of the existing infrastructure. And so we would be able to process anything that's discovered in these areas at the existing mill, and we can expand and ramp up the mill as needed. So again, while this property is 18,000 hectares, it's a district, and we have a lot of opportunity here to continue to grow it going forward. Our next mine is the Bolivar mine, and the Bolivar mine is a shallower mine. It's, we actually, rather than use shafts, we ramp down. You can actually see the copper bleeding out here through, and that's essentially how we're mining this, is we ramp down. And, we're using long hole, and we actually are recovering some pillars. But there's several opportunities here at this mine, and we continue to find new opportunities and grow our production here. We own 100% of this mine, and currently we're ramping up to 5,000 tons per day, which we expect to be at before the end of the year. And additionally, as I announced, we've just announced a PEA, which we're going to be bringing this to 10,000 tons per day starting in 2024, which is going to not only help us to increase the copper production, but we're also going to continue to expand our, our lower our costs, expand our cash flow, and expand production. The one thing I'd like to point out here is we have a reserve life of 4 years. And so a lot of people think, like, well, what are you doing when you only have a 4-year mine life? Again, that's just on the probable reserves. We have 41 million tons of resources here. And so we're working now to complete the infill drilling to convert these into reserves. As well, we have several other opportunities which we're developing right now. So we're not worried about having the mill feed. In fact, it was based on the large tonnage of resources that we decided to go ahead with the expansion. So these, again, we have a good conversion ratio here of about 70%. So we'll be able to convert that. And we have many other opportunities that I'll show you in the upcoming slides to continue to grow the resources to support increased throughput. Looking at our production here, you can see we're back in 2017, we're at 2,500 tons per day. In Q3, we're at 4,600 tons per day. As I mentioned, we'll be at 5,000 before the end of the year. Our copper production from this mine for the 3 months this year is 27.8 million pounds of copper. And again, that fourth quarter should continue to be strong here, and we should continue to see strong production. In terms of our costs, for the 6 month period, we'll report our numbers for the third quarter on November the 9th. Our costs were $1.09, cash costs $1.73, and you can see that those are trending lower because in the third quarter it was at $1.02 and $1.60 for all-in sustaining. So our costs are continuing to go in the right direction as we ramp up production. And you can see here as well in the revenue pie chart here is that copper is the largest component at 59%. However, we do get strong silver and gold credits, which continue to improve the value per ton from this mine. This is just a photograph of the, or an overhead of the mine itself right now. And on the right here is the El Gallo Mina del Fierro ore body. This typically is where we had mined in the past and which would provided most of the feed for the mill. And so we get about, probably about 1% copper equivalent grade from this area with the copper, the silver, the gold. We, similar to Yauricocha, had run a Titan 24. We did some drilling and we discovered several new targets, including the Bolivar Northwest, Saniguita, Bolivar West, and the Bolivar West extension here. And so where we're also mining right now is right here at Bolivar West. And so the mixed feed here is about 60% coming from El Gallo and about 40% coming from this area. And the good thing about Bolivar West is that we get improved copper grades. We also get higher gold and silver grades, and we also get better recoveries from this area. So this continues to provide excellent feed, but we also get improved copper from the other zones that we discovered. And so going forward, we'll probably see this eventually blend to be more of a 50-50 blend between El Gallo, which continues to grow and provide economical ore for us to produce, but we're also continuing to find higher grade sources to blend. So we are seeing higher throughput up to, as you noticed, we're going to go up to 10,000 tons. We're going to see our costs continue to go down as they have demonstrated in the previous slide. And again, here we're in a porphyritic environment. And so we're testing this again because we think there's a potential for a porphyry at depth, which again is a game changer for the company, but it's longer term. In the meantime, we continue to find good opportunity right at this mine. The other thing I'd like to point out in Mexico is that we have over 90,000 hectares of mining concessions. And so Cusi is located here. You have Bolivar located here. But we also, last year, we're doing some work at Batapilas and here at Lorena. Batapilas is a copper moly porphyry. Lorena is copper gold. These are a good next stage opportunities for future mines. And so we'll continue to drill out on these, but these are all excellent mining concessions with very good, opportunities for mines. And so we're not limited by any means to the number of concessions we have and the ability to grow. Finally, our last mine is the Cusi silver mine, which is in a very highly prospective silver district, which has been mined since the colonial times in Mexico. We own 100% of this mine. Again, it's a large land package, about 12,000 hectares. The mill here is going up to 1,200 tons per day this year. It was running at about just over 1,000 tons in the third quarter, and we're hoping to be at 1,200 before the end of the year. Here we have probably, if you had to average it, as I mentioned, just under 7 million tons of resources. We'll actually see that increase with the next 43-101, and we'll continue to build this up and improve the mine here. The one thing that we have here is you can see here we did 1,074 tons per day in the third quarter. We produced 328,000 ounces of silver from here, and this mine is just going to continue to improve. You can see here already from the 6 month mark, looking and then at the for the second quarter, the costs had come down. We're going to see the costs, as I mentioned here, come down with cash costs of between $14 and $16 in the latter part of the year. So this mine is going to become profitable, considering the current silver price, and it's going to be a net contributor to the company rather than a cash draw. So we're quite excited about this. Where we're mining here is an area called Santa Rosa de Lima, and so this line here is the Cusi fault, which runs for about 12 kilometers on our property. And the area that we're focused on right here is the Santa Rosa de Lima area. We drilled about 30,000 meters here. Almost all the holes hit. We're getting an average width of 4 meters and an in situ grade of about 372 grams per ton. So this started off being 700 meters. We've since stepped out both ways, and this is now 1.7 kilometers strike length. But what's more interesting is that we hit a cross zone here. I'm going to show you on the next slide. So this again is this line here is the Santa Rosa de Lima zone. But to the north here, we've discovered in this white box a new high-grade silver discovery. And what's exciting about this is we're getting some excellent grades here. We've drilled about 1,000 meters, and we're getting grades including 17.45 meters of 428 grams silver, even just under 5 meters of over 1,100 grams silver. And so, as I mentioned, we've drilled 1,000 meters. We're going to drill an additional 1,000 meters in this area. The zone extends up over 300 meters in length. And so what's exciting about this area is it's virgin territory. The mineralization, even up to before we had the mine, was always thought to occur to the left or to the southwest of the fault. And so now this whole area that we're mining is virgin area. It's never been mined. So we're going to be totally able to take advantage of all the high grade material there. This could be a game changer for the company. As I mentioned, we've done 1,000 meters. We're going to do another 1,000 meters here. So there's a lot of opportunity here to expand out the resource and to improve the resource with higher grade. We've actually been processing some of the tonnage, the development tonnage from this area, and had very good grade reconciliation from there. So we're quite excited about it. So why would you invest in Sierra Metals? We're a diversified asset producer. We have 3 mines in 2 countries, and we have 5 different metals. Excuse me. 5 different metals, and it acts as a bit of a natural hedge against fluctuating metal prices. And we have strong exposure to the copper and silver and gold in our revenue mix. We're a strong growth story. We've continued to grow the mines and to grow and improve our product profitability and our cash flow. We've got a good track operating record. We're in great jurisdictions of Mexico and Peru, which have well-established mining codes, and we can find qualified workers to run these mines. We have a solid financial position, which is only just going to continue to improve this year so that we can continue to grow the company and hopefully get to a point where we can start to return capital to shareholders. As well, we have an experienced management team and a very supportive board, which are focused on the per share value of the company and returning that capital to investors. So we're going to go to questions here now, but I would like to thank everybody for listening to the presentation. As well, you can find a lot more information on the company at our website, which is sierrametals.com, or feel free to follow us on any of the social media, Twitter, LinkedIn, Facebook, Instagram, that are available to us.
Absolutely. And Mike, I appreciate that very much. I'll be saying this throughout the whole day. I love when executives can come on here and really go into detail about their company, because some people really want to hear it, not just read it or see it. And sometimes they may not fully understand maybe a certain stat, a certain number, a certain asset, who knows. But to hear from yourself, I appreciate that very much. And we're going to be hearing from you more as we turn over to our questions. I saw quite a few come in. So why don't we start from the very top here? This one is from Mark, and Mark is asking, how are zinc refining / smelting charges looking for 2021 relative to 2020?
So we're in a process right now. So in terms of our offtakes, we run an auction process, and with that auction process, we have multiple tenders come in for the offtake from the three different mines, and so we're in that process right now. So the numbers haven't been finalized yet. Usually they solidify and get finalized in November. But from what we're seeing, it looks like there's an opportunity based on smelter capacity and available production to lock in some lower treatment and refining charges this year versus what they were last year. I wouldn't say they're a lot lower, like maybe 20% or so, but it's looking better in terms of the TCs and RCs for zinc in the following year coming up.
Fantastic. A follow-up question from Mark as well. Assuming Bolivar's expansion is a go, and what all needs to happen to be ready in 2024, and what is the expected cost? How much magnetite would you expect to produce/sell to enhance the economics?
So the life of mine capital is probably it's 317 million. Probably 100 of that is required upfront to do the expansion. The rest is sustaining capital over the life of the mine, or just over 100. The final report hasn't come out yet, so I don't have all those numbers, but I do encourage you, when that report is filed within 45 days, to review that. It'll have more information. So in terms of, I think the magnetite you were asking about, that's still under study. So there's not a final number yet. As mentioned in the press release yesterday, that's something that we're looking at, but we don't have a final number yet for that. I don't imagine it's going to be a huge amount. It'll probably add a few million of cash flow to the company for that mine. But it's not a huge offset. But at the same time, the good thing about that is, it just provides some coverage for other costs, whereas we weren't getting any value for the magnetite. We have a lot of magnetite in our tails, and so we can reprocess the tails as well as process our existing operations for the magnetite. And that's going to be done through a separate plant. I think that's going to use a magnetic separation to concentrate and sell it. But again, that's it's being studied and looked at right now. So there's more to come on that as we finish the studies.
Absolutely. The next question here is asking, the third quarter production numbers were good. Is this expected to continue in the fourth quarter and into 2021?
Yes, they should continue. However, as I mentioned at the beginning, we have to be aware. COVID is a lot of people we're operating. Everybody, it's easy to forget COVID, but COVID is still very much a factor for us. And so while we're doing everything we can to meet our production numbers, we're always at risk of some of the things that typically happen is we'll have a piece of equipment go down, and we can't get the mechanic into the mine to fix it because we're having they have to pass the quarantine process, and so we'll have somebody come in, they'll fail the quarantine process, we have to get somebody else. So we've had some equipment availability issues, and we're not working at full capacity of employees because some are testing positive and are being turned away. So as much as we're trying to manage that process, I think the fourth quarter will be strong. But I can't guarantee it's going to be as strong as the third quarter. It might be a little bit less, but at the same time, we're not going in the other direction. We still will see stronger production continue into the fourth quarter and into next year.
Beautiful. Yeah, it's going to be a continued thing to have to look over for sure. At COVID, it's always going to be a challenge there. The next question is, do you expect to have lower costs as production ramps up?
Yes. As we ramp up production, we're going to continue to lower our costs on a per unit basis. And, that not only is benefited, like in Cusi, from having higher grade material to put through, which obviously gives us more ounces of silver, so more ounces to divide those costs over. But generally speaking, it's 3 units of scales of economy. As we ramp up production, we expect to see our costs continue to trend lower going forward.
Beautiful. The next question here, we'll jump over to John. John is asking, you mentioned high-grade silver discovery at Cusi. When would this area be put into production? Is this area factoring in the company expecting Cusi to become profitable in the near term?
So first question is, Cusi would have become, with or without that new discovery, Cusi still would have become profitable in the near term. We're processing a good grade. Our average grade right now is about 180 grams that we're putting through. And given the ramp up to 1,200, yes, Cusi would have been profitable already at that. The new high-grade silver discovery, we're continuing to drill on it, but it's adjacent to an existing ore body that we're mining currently. So there's not a lot of infrastructure required to develop this. It's something that we can bring into the mine plan probably in less than a year. And so, as I mentioned, we're already putting some of the development ore through and seeing positive reconciliations and grades higher than some of what we've been mining currently. And so, yes, it's going to come in probably within the year. We hope to include some of this drilling in our next 43-101 and start putting this into the resource. And yeah, it's definitely going to help to further improve metrics here, including the grades, including the lowering the costs. Overall, it's a win-win for the company.
I'm very glad to hear. Well, this next question is actually for myself, and it's basically in the sense that I know that many of the mines seem to have relatively short lives, and you always want to see a little bit more length to those. You want to see them being longer. Is your company doing anything right now to address that?
Yeah, and I did address that in the presentation a bit, but it's so for example, at Yauricocha, this is a 70-year-old mine. Although the mine life has never been higher than 5 to 7 years because it gets too expensive to drill to depth. What have we done to address it? We've started to do brownfield exploration, which is looking around the mines at the existing mines. We had the Esperanza discovery, which went from discovery into production in less than a year. And that that's probably about 40% of our mill feed currently going to the mine. We've also discovered several new opportunities, as I mentioned, Via Mascoda, and then even Kachi at depth. And we have several new opportunities we're working on right now. And so we continue to find new ore bodies that are closer to surface, closer to the existing ore bodies, which will allow us to expand the mine lives. And but we do have resources at depth, and those resources typically have converted at about a 75 to 80% level at Yauricocha. So while we show a 7-year mine life, the true mine life is probably more 10 to 15 years. Bolivar, very similar, although it's only showing a 4-year mine life. That's basically a lot of resources that were coming, or reserves that were coming from the one area called Cuya Mascoda. And Cuya Mascoda is a little bit lower grade. And so while we have a lot of resources in Bolivar West in those areas, we were developing those areas to mine. And so we weren't able to get as much of the drilling done that we wanted to get done there before the last 43-101 to convert it to reserves. But the resources are there. We have 41 million tons of resources at Cusi, which is huge, and we expect to find more. And so we're working now to convert those into reserves. And again, the conversion ratio is probably about 70% there. So while we see 41 million tons, obviously we're going to see a significant bump to the mine life there, and also be probably in excess of 7 to 10 years at Bolivar as well currently.
Beautiful. I appreciate that. The next question is from Mark, and he's asking, assuming expansions planned for 2024 are approved, how would the company's growth capex look like through 2025 relative to the last 5 years?
So we've kind of gone through an expansion process, bringing the mines up to where they are currently. So we've been spending about $50 million a year as we were ramping up to the existing levels of probably 3,600 at Yauricocha, 5,000 at Bolivar, 1,200 at Cusi. We're finishing off some capital expenditures this year. Some of that may bleed into next year because with COVID, we had to slow down. We weren't able to complete all the projects we had to complete. However, our sustaining capex for these mines is $20 to $25 million. Our growth capex in the next couple of years, we're going to be spending money on exploration because that's important. We're going to continue to develop shorter term areas. However, the next couple of years probably won't be as high as it's been. However, we do expect, as we're ramping up, probably starting in 2023, as we're getting ready to ramp up and expand these mines again, we'll start to see some capex build. And so obviously, I would look for capex. It might be a little bit lower in 2021, 2022, but it's going to ramp back up probably to around that same mark as it's been as we expand all three mines. And so I can't say too much more as we haven't put out official guidance, but that's kind of a general guidance I guess I could give you.
Absolutely. Yeah. There's only so much you can say before you start getting in trouble there. So not to worry there. The next question, we had two more come in. I believe these may be our last for today. Is how is development progressing at Cusi to reach 2,400 tons per day?
We're reaching 1,200 right now, and so the 2,400 wouldn't be probably until 2023, 2024 that's going to come in. And so what has to happen there is we're developing a new tailings dam. Sorry, our lights flick on this building here. Developing a new tailings dam. We also have to do some more development and exploration work there to support that level. And so it's coming along. We're finishing the development. As I mentioned, we did have the subsidence, but we've developed around that. We're back into the high grade ore. The tailings dam is progressing nicely, and that's going to have a significant mine life on it. So it's moving along, and it'll come in as scheduled, I believe. And we'll go from there. But at this point, we're planning for 2,400 in 2024. But right now, we're just happy to have it get up to 1,200, become a profitable mine, and start to be a cash contributor to the company.
Beautiful. I appreciate that. And then for our last question for today, for yourself here, year to date, copper future prices are up 13%. Up in the last couple of days, and I believe he's saying, and they're up in the last couple of days. Any thoughts on Sierra's EBITDA or cash flow sensitivity to price changes?
Well,
into the CFO questions now.
Yeah, no, I mean, this is going to be a general answer because we haven't put out any official guidance, but definitely copper is our largest revenue factor. And so, as these prices go up, we're definitely going to see higher EBITDA and higher cash flow. I don't want to lock ourselves into a number here because we haven't really provided any financial guidance or EBITDA guidance. So all I can say on that is definitely, if you look at the revenue chart, we're going to be closer to 40+% of our revenue coming from copper. If the copper price is going up, that's just going to continue to benefit our bottom line and to improve our profitability. And as we're ramping up production, our costs are going down. So it's a win-win for us as we see higher copper prices.
Absolutely. Well, Mike, I appreciate very much you taking the time to come in here. All of our investors, I appreciate you being here as well. We'll be moving on to our next webinar in a moment here, but we do have a few minutes now to grab a coffee if you need to grab something to eat, whatever it be, before our next presentation begins here. But Mike, in closing, if someone was listening to all of this, they want to continue to either maybe ask questions offline or look more into your company, where would you like to guide them?
Sure. So our website is a wealth of knowledge. It's www.sierrametals.com. You can reach out to us through email at info@sierrametals.com. As well, you can follow us on any of the social media pages, on messages there, Twitter, Instagram, Facebook, LinkedIn. We're always happy to hear from you, and we're always happy to take your questions.
Absolutely. Well, I appreciate it very much, Mike. I hope you enjoy the rest of your day today as well.
Thanks so much, Brendan. Take care.
Take care, everyone.